Good morning, everybody. Welcome to this webinar with Vietnam Holding. Thank you very much for joining this morning. I'm sure that you will get a lot out of this call. We do a lot of work with the team at Dynam Capital that manage Vietnam Holding, and every time we're in investor meetings, it's always a fascinating insight into Vietnam and what is happening on the ground in Vietnam, and how investors can access that via investing via VNH, which, as you know, is a closed-end fund that invests in Vietnamese equities.
Thank you very much, Simon. And good morning to everyone from UK and Europe, and good afternoon from those who are with us here in Asia. As Simon said, Vietnam Holding is a closed-end fund listed on the main board of the London Stock Exchange. And I'm Craig Martin. I'm the chairman of the investment manager, Dynam Capital. Dynam Capital focuses exclusively on Vietnam, and we're an exclusive focus on looking at the opportunity in Vietnam through the lens of equities. We don't invest in direct real estate or in fixed income. We don't manage proprietary capital. We just look after our clients' capital, and we build a very actively managed, high conviction portfolio. As Simon said in the introduction, we have a strong commitment to responsible investing and ESG. The portfolio has been a strong performer over many years, just under 17% net return compounded per annum, and outperforming the Vietnam All Share Index. We're also one of the top performing funds in Vietnam for the 9 months to the end of September. We're the top performing single country fund listed in the UK. And also earlier this year, we were top performing investment company in the UK. So hopefully we're doing something right. It's a concentrated portfolio, about 24 holdings, no gearing. And in addition to the strong financial returns we seek to make for our clients through the portfolio, very pleased that on a carbon footprint basis, our average footprint over the last 2 years is 35% lower than the index. And also we've scored well on the United Nations Principles for Responsible Investing report. And we've been a signatory of UNPRI for over a decade. Our themes are across the attractive areas that fall out of Vietnam's macro, which my colleagues will talk to shortly, across the industrialization opportunity, the consumer opportunity, and the urbanization opportunity. We're an active manager. We're on the ground in Ho Chi Minh City and really engaged with our portfolio companies. And we're right-sized for the market. We're able to navigate from the small companies to the large companies, and yet maintain that engaged approach, and working with our portfolio companies on their own ESG journey. A number of people joining today are new to Vietnam and new to Vietnam Holding. Some are also very familiar. So we'll just try and get everyone on the same page. Vietnam, strategically located at that cross point between Southeast Asia and Northeast Asia, a large country, a large population, close to 100 million people, and a young population in a very politically stable and economic environment. Well-educated, highly literate, and increasingly digitally savvy. More than 70% internet penetration. That means there's 72 million social media users in Vietnam. There's also 25 million people that use their internet connected TVs to watch things such as YouTube, which is one of the highest levels in the Asia Pacific. And this digitalization also comes through in how people access the capital markets. And we'll see some of the effect of that later when we look at the size and the growth of the capital market. Vietnam's a very much open economy. It's open for trade. 200% of its GDP through its trading activity. It's close to $600 million US. If you go through your wardrobe, not now, but later, you'll see many items made in Vietnam, t-shirts, your running shoes. So yes, Vietnam's been a large garment exporter. It's the second largest in the world. Your coffee, Vietnam's the second largest coffee exporter in the world. And historically, a big exporter of raw materials and furniture and these kind of items. However, just as importantly is Vietnam's transformation to a modern economy and also attracting foreign direct investment into more high-tech areas So mobile phone assembly and computers and tablets and all this kind of high-tech enabled goods, and potentially also EVs, electric vehicles. So as the countries attracted this foreign direct investment for manufacturing for export, and under the umbrella of this very open trade policy, where it's negotiated both bilateral and multilateral trade agreements, it's seen wealth come to its people. It's seen living standards rise and income levels rise. And through this kind of compounding growth journey of the last 30 odd years, the GDP per capita has now gone through $3,000. So the people in Vietnam are starting to consume. So it's a very interesting place to be, and it's an exciting opportunity, and we'll have some time to take you through that today. How we approach that growth journey is through equities. That's all we do. The exclusive focus of Dynam is on choosing a portfolio of equities, good companies to invest in for its clients. So we're looking for those businesses that can compound their earnings growth over the long term, yet at a reasonable valuation, not necessarily cheap, but a fair valuation for the growth that they have. Strong balance sheets, strong, capable cash flow management. We're also looking for category killers, companies that are going to be champions in their sector, that can build defensive moats around their business with good management teams, but very importantly for our approach, willing and committed to engage with us as an investor in how they improve their own ESG journey. So we have our own ESG approach, which we'll talk about, but we really want to bring our portfolio companies along with us on that journey. The EPS growth is strong, almost 50% this year in our portfolio. It's much higher than the market. And for next year, we're also looking at maybe 24% EPS growth, where the market's perhaps on somewhere between 15 and 20%. And in terms of valuation, the price earnings, our portfolio is on about a 12 times PE for this year, with the market ranging between 14 and 16, depending on which index you use. And for next year, we're looking at our portfolio trading on about 10 times PE against the market of around 12 times. So it's growth at a reasonable price. At this point, I'll hand over to my colleague Tan, who will walk us through a little bit about the macro situation in Vietnam and also talk on the equity market development.
Thank you, Craig, for the introduction. And now I would like to get you through the macro picture of Vietnam, especially after the COVID-19, the Delta variant. Vietnam was among a very few countries in the world having positive GDP growth in 2020. And we started the year of 2021 with a lot of hope and with the expectation that we can be back to the normal level of the long-term growth of 6 to 7% of GDP growth. However, because of the Delta variant, now we are looking at just about 3.5% GDP growth for this year. But it's still growth, and it's still higher than many countries in the region and also in the world. And actually, we are more bullish on 2022. And we believe that Vietnam could be back to the normal, the long-term growth of 6 to 7% of the GDP growth. Is it worth noting that until now, the vaccination rate of Vietnam in key economic areas, including Ho Chi Minh City and neighboring provinces like Dong Nai, Long An, and Hanoi City already reached the level of 60 to 80% of the population already fully vaccinated. And other areas in the country is about 25 to 30% of the population. I think that the situation would get better by the end of this year. So the picture for 2022 would be very good. It's the long-term growth of Vietnam, 6 to 7% is even more encouraging. If we look at the size of the economy of Vietnam, after 20 years of very strong growth, 6.5% for long-term growth, and we still think that Vietnam could maintain that growth for the next 5 years. And now we would like to update you the FDI disbursement of Vietnam during the COVID. We, of course, have seen many headlines talking about many FDI companies in Vietnam, including textile company, footwear company, they moving away from Vietnam to diversify But actually, we think that this is just temporary. And Vietnam is still the destination for FDI of the world and attracting about $20 billion of FDI investment every year. Even in 2020 and 2021, the disbursement is about $20 billion. And the FDI registration in 2021 is still have positive growth, which means higher disbursement in coming years. And the competitive advantages of Vietnam compared to its peers, especially compared to China, is still intact, especially in the context of the energy crisis. And Vietnam will even have better position. So we think that the key growth driver of Vietnam, the FDIs, will stay intact in the next 5 years. Now, talking about FDI, we talk about the export. The FDI is the driver of the export of Vietnam. And as Craig had just said, we're now improving the value chain, export more value-added products like electronics, and now we even thinking of the plan to export automobiles. You may recall that in the last few years, Vietnam have entered many trade agreements, and we already see the positive impact of those agreements when we look at the export growth of Vietnam for the last few years. And we think that this year and even next year for the RCEP agreement, we think that the trend is still intact. And the export of Vietnam will be back to the strong growth trend. Now look at the diversified export market of Vietnam. Now, and though key major markets already have very strong growth, and we think that Vietnam can catch up the opportunities of the global recovery to increase the export for next year. So next, the other key growth driver of Vietnam is the domestic consumption, the retail. Look at the chart. The retail market size of Vietnam already have more than $200 billion, a very sizable market. And the consumption of Vietnam is still very resilient after the pandemic. We have seen the strong rebound of the consumption in October, and we think that this could be the trend in 2022. But for the international travel, also include in the retail growth of Vietnam could not be like visible until the second quarter of next year. But I think that this is for the long term, and then of course we will contribute more to the retail sales of Vietnam. Now I would like to get you through the more overview picture of the monetary and the banking sectors of Vietnam, the financial health of Vietnam. Even after the COVID, we have seen that the FX reserve of Vietnam is still at a record high, still about $100 billion, similar to the number at the end of last year. Vietnam still have a very healthy current account, and the currency of Vietnam has been stable compared to other regional currencies. And we think this will be sustainable, backed by the sustainable FDI inflow, trade surplus when the export recover next year, and also by a number of stimulus package by the government. The National Assemblies are talking about a stimulus package of billions of dollars to spur the economic recovery of Vietnam for this year and next year. And we still think that Vietnam still have abundant room for more easing fiscal and monetary policy. Just one issue is inflation. Everybody talking about the pressure for the inflation, and Vietnam cannot go another direction. However, the situation in Vietnam may be different because the pressure is not that severe compared to other countries like China, because Vietnam can still produce construction steel, can still produce fertilizer, can still export crude oil. Vietnam have the reserve for natural gas. So the impact is still there, the pressure is still there, but we think that the impact is not that severe. So the inflation is not a big issue for Vietnam, surprisingly. So that's pretty much for the macro picture of Vietnam. And how about the equity market? Where is the opportunity? So I would like to walk you through the equity market. Surprisingly, Vietnam is among the best performers in the global market. And the liquidity of the market actually increased by 5 times compared to the level before the COVID in 2019. Some may argue that is it because of the participation of many speculators, but we don't think so. We think that is in the long-term development of the equity market. The market cap increased since 2017 because of many IPOs of private companies and also state-owned enterprises. And now there is more participation of local investors to catch up the opportunities. There are many volatility when the market is still young, but I think it's the turning point for the development of the equity market of Vietnam. So what about the valuation? Craig have already mentioned in the first part about the attractive valuation of Vietnam. Now look at the price to earning, the price to book, and also the profitability of the Vietnam equity market. We still think that is compelling. The high price to book ratio of Vietnam can be explained by a number of outliers in the real estate and in the banking sector. And the story for the inclusion of Vietnam market into the MSCI emerging market is still intact. Currently, Vietnam is the largest weighting in the MSCI frontier market and also the largest market capitalization among frontier markets. And the inclusion of Vietnam into the MSCI emerging markets is one of the KPIs of the government in the master plan to restructure the financial sector to make the economy to be less dependent on the banking sectors and also to accelerate the SOE reforms. So we think that we need more incentive for the government to restructure and to develop more the equity market. And the key impediment for Vietnam to be included in the MSCI emerging market will be including in many developments of the equity market. For the last few years, we have seen many developments, including the introduction of many derivative markets, and foreigners can be more accessible to the local market. They can buy FOL, foreign ownership limit stocks, by buying ETF, many local ETF. And this is the trend, and this will be more accessible for both foreigners and for local investors. And more reason is the new law on securities, which provide more guidance, more regulation to protect minority shareholders and also foreign investors. And we are on the ground and we are waiting for more guidance, more directive from the law on securities in coming times. That's pretty much for the equity market. And now we would like to hand over to Anton to talk about the Vietnam holding portfolio.
Thank you, Thanh, for the promising view of Vietnam. Good morning and good afternoon, everyone. My name is Trịnh Vũ, and I would like to go with you to more detail about the VNH portfolio. At Dynam Capital, we think investment in equities in Vietnam is a good way to participate in Vietnam growth story, and we construct the portfolio to capture that potential. Our investment philosophy based on the belief that the key driver for Vietnam to grow in the next 20 years include domestic consumption, industrialization, and urbanization. So we build our portfolio investment themes based on those mega trends. With the combination of bottom up and top-down approaches, the team on the ground is able to pick up companies that generate 20% earning per share growth or even more per annum with the compelling price. We also integrate ESG consideration into all steps of our investment process and carry out an active engagement program with our investees. COVID-19 with social distancing measures could limit us to conduct face-to-face meetings, but cannot stop us to make regular video phone calls with chairman, CEO, and the key manager of companies that we invested in. Please have a look at the top 10 holding of our portfolio. You can see that we have a high conviction portfolio, very concentrated of about 69% of our portfolio on the top 10. About more than a year ago, we started to increase our exposure to banks from about 10% to about 30% of portfolio. And we benefit from that, from the strong performance as they doubled their earnings in the first half of the year. We since then taken some profit in the sector and reduced our exposure to banks by about a third. Now banks about only 24% of our portfolio. Next slide, please. I'm going to talk more detail about our three companies of our top 5 holding. And the first one is FPT, that many of you that know the name. That's the top holding as it really stood out during the pandemic. After spinning off of each trading business and expanding its operation internationally, the company is re-rated as its profit margin being and its earning growth having better quality. On its 3 lines businesses, including digital transformation for global companies, broadband services, and training facility are benefited from the pandemic because the people need to be equipped more to learn and work from home, and global companies need to spend more money for digitalization. In the first 3 quarters of the year, the profit after tax of the company grew at 19%, in line with our expectation. And we also expect that the company will continue to deliver the growth earning per share about 20% next year. Earlier this year in June, the company also participated in a webinar to share their business perspective with our investors. Next, please. Another company in our top 5, named Mobile World, also gained market share during the pandemic. The company had 3 retail chains of mobile phones, electronic goods, and groceries, with total of 4,715 shops in the whole country. And the company is open 2 shops every day before the COVID. However, during the peak times of the social distancing, it needs to close about 70% of each shop. However, that its online orders grew 4 times compared with the one in last year. So we expect that the company earning per share will grow about 38% next year with a good recovery. The next one is Germande. We also convicted in port and logistic services, as the sector has a very strong link with the manufacturing and exporting story of Vietnam. Germande, the second largest seaport operator in Vietnam, and is one of our top 5. The company recently put into operation a deep sea port called Germande, with capacity of 1.5 million TEUs per year, located in the south of Vietnam. Actually, that in Cái Mép Thị Vải, an hour from Ho Chi Minh City to the east. The area that witnesses a very high growth of port business, average about 25 to 30% per year in the last 5 years. So that's why the company is able to fulfill 90% capacity of the new port in the first phase, and will continue its expansion to the second phase next year. We expect the company will grow its earnings by 64% this year, and will deliver 51% earning growth next year. So that's a snapshot of our portfolio. Our approach is to select good company, good growth company with reasonable price, and engage with them to hand them on the long journey of being better on corporate governance and better on ESGs, and then enjoy the compounding earning growth with them. We think our portfolio is well positioned for the recovery and growth of Vietnam in 2022. With that, I would hand it back to Craig to talk about the performance.
Thank you, Tin. Just one thing perhaps to draw your attention, people that may be more familiar with Vietnam Holding than others would have seen our median market capitalization increase over the years. Now that's partly this tremendous compound growth that Tin referred to. Some of our small, medium companies, now large companies, because they've doubled last year and they've been growing at 20% plus compound growth over the last 3 to 5 years. The other reason for the slight shift in size is because of that increase to the banking sector. They're typically larger businesses. There's no style drift. We're looking at those growth companies in the core sectors of the consumer, the industrialization, the urbanization, all underpinned by robust financial services. Performance has been very strong on a NAV per share basis. These are estimates as of yesterday, 31st of October, as shared in the RNS, which went out on Friday in terms of estimated NAV. So year to date, just over 58%, outperforming the Vietnam All Share Index and performing more strongly than the MSCI emerging market. And also those returns very robust on the 1-year basis, 90%, and also over 3 and 10 years. So we're looking at really finding a portfolio that can deliver strong returns over the midterm. If people perhaps look at getting some exposure to Asia, they might find that they're in a fund that has a lot of India or a lot of China equities and maybe just a little bit of Vietnam if they're lucky. I think if you looked at the MSCI returns for India and China over the last 5 years or so, for India, they've been very strong, 11.5%. China, probably half of that, maybe 6%. And Vietnam, more than 12.5%. So if people were wanting to allocate to emerging Asia, actually it makes sense to perhaps consider being a little bit more overweight in Vietnam. As Tan said, Vietnam is a frontier market. It's the largest, it's 30% of the frontier index, but it has many of the characteristics of an emerging market economy. It has a much more liquid stock market than many years ago, more companies to choose from, and actually it's the second highest liquidity in Southeast Asia. So for people that allocate to Asia, maybe add a little bit more of Vietnam and you'll get kind of an alpha tail to enhance your portfolio returns, because Vietnam's done very well and Vietnam Holdings NAV per share has put in a very strong performance over a number of years. Just a little bit again to recap on who we are. So Tin and myself, Craig, perhaps that's a younger picture of me. We have a team that really embodies Vietnam, a young, hardworking, 50% female, diligent. They want to do well and they want to perform well, and indeed they are. So we're very proud of our team, active on the ground and connecting with all of our portfolio companies. And we have a strong commitment through that to strong operations and strong ESG reporting. Within responsible investing, it's not just something we feel good about, although we feel good about it. It's that we think responsible investing can drive sustainable growth and, importantly, manage some of the downside risk in a portfolio. So we've integrated, as Tin said, responsible investing into our investment process. We have a strict screen and we have an exclusion list of companies that we won't touch around our own criteria. We score each company we look at on our own proprietary scoring matrix, and we keep this updated in the database to see how companies can perform and improve on the various dimensions that we identify. And being on the ground, we can conduct due diligence meetings and site visits, and we can take our time to get to know a company over months and years before perhaps we allocate when we're comfortable that they're making enough progress in some of those key dimensions of ESG. And Tin and a team with a high level of authentic thought leadership on that engagement, well regarded by the portfolio companies, we're able to provide that active ownership, and yet we're listened to. So we're able to even touch some of the thorny issues of governance by providing both advocacy, best practice, and training in a non-threatening way, and encouraging our companies to do better on those dimensions, and also on the dimensions of reporting and investor reporting and investor transparency. And that's not to neglect the E in ESG. And clearly that's critically important today, more so than many other periods in our history. We're a member of the Asia Investor Group on Climate Change. As we mentioned at the beginning, we've conducted our own portfolio analysis. We hired a firm to conduct our carbon footprint analysis across our portfolio, and we're pleased that we're 35% lower than the index. But next year, Vietnamese companies will have to do that too. They'll have to report. So we're providing training, and we're looking at a webinar later this year to really work with some of our local companies and how they can get themselves ready to do more, measure more, and report more on climate to their investors. As a summary, why Vietnam now? We're seeing expanding capital markets. We're seeing tremendous increase in liquidity and that inflection in the economic growth. Yes, Vietnam's been a top performing market globally and has outperformed India and China. And Vietnam Holding has even gone far beyond where the index in the market has been. There's an attractive valuation. Our portfolio is trading 10 times 22 forecast earnings. And although, as Tan said, the market's been really enlivened by the domestic investors, these 4 million retail investors, 100,000 of them a month, data enabled, coming to participate in the capital markets. Foreign investors historically have also journeyed with Vietnam, and Vietnam now is 30% of the MSCI frontier market. And at some stage, we believe it will be part of the emerging market, and that'll be a game changer. The rising levels of disposable income as Vietnam has journeyed and compounded its earnings as a country mean that there is a domestic consumption story past that critical inflection point. Multinationals are continuing to double down in Vietnam. Vietnam's gaining market share from China and other countries, and we're still seeing an export boom despite all the ravages of COVID through Vietnam and the rest of Asia over the last year. The government is committed to more of its privatization process, freeing up state capital. Earlier today, the Prime Minister of Vietnam is in Glasgow, and he's talking about the pillars of his economic development. And the government's actually aligned with financial investors. Their policy is on a modern industrialized economy, Vietnam being a key part of global supply chains and seeing its population wealthier. So this, fits perfectly with what we seek through an investing lens on behalf of our clients into Vietnam. Why Vietnam Holding? Well, we're nimble. We're able to navigate across the market opportunity in Vietnam, focused only on listed equity or public equities and only on Vietnam. And we're really engaged with each of our companies on that responsible investment journey that they're on, and strong performance over a number of years. The fund can be bought simply through the main board of the London Stock Exchange. Contact your broker or our corporate broker, FinCap, or reach out to Simon Courtney and other people that are helping with the promotion of the company. Liquidity is much improved. We're very pleased that not only has the performance of the portfolio been so strong, certainly over the last couple of years, particularly this year, but also the stock market seems to see that too. There's better liquidity in the fund's units, and the discount between the share price and the net asset value has narrowed substantially. And I think we're the narrowest of the 3 London listed investment trusts, as well as being the top performing trust. As Simon said, we're open for business. Please contact us, reach out to us. We want to be there for you, for your questions. And with that, I'll hand over to Simon, and we'll go into a period of Q&A.
Super. Thank you, Craig and team. That was fantastic. So a really thorough run through of what is happening on the ground in Vietnam and also with the fund as well. What is the current situation in Vietnam re lockdowns and restrictions due to COVID-19?
The Delta variant's been very strong through Vietnam. There are periods of intense lockdown. They're now being relaxed, and the economy is resuming its normal path and normal activity after a very difficult time with COVID. Since April, I think about 900,000 people that had COVID. Around that, the vaccination rate has been increasing. As I think Tan said, in Ho Chi Minh City, more than 80% of the Ho Chi Minh City population are vaccinated. Nationwide, though, there's still a long way to go. About 25%, I think, fully vaccinated. So there's a long way to go over the next few months. But the government's looking to balance the economic opening up, as well as making sure its population are safe and healthy. And the Prime Minister earlier this morning in Glasgow also alluded to those initiatives. So it's much more open than other parts of Southeast Asia, yet it's still closed to a lot of incoming tourists and travelers. But it's a large domestic economy. And so the key and the focus is to get the businesses humming back to full speed and get the domestic economy back to its growth rate that Tan alluded to.
Super. Thank you, Craig. Moving on to our second question. What do you think will be the impact of world climate policies on Vietnam's economy? Will Vietnam benefit from shifts to climate-friendly products?
I think the first point is that Vietnam's not a very big emitter. Second point is that Vietnam has, over the last few years, really tried to embrace renewable energy and clean and green energies. Not without its challenges. It's gone from kind of 0 to kind of 20% of its mix through renewable non-hydro sources. So obviously they're looking to invest, and it's opened up tremendous opportunities in renewable energy investing, alternative forms of energy, and over time in terms of grid to interconnect those sources of renewable energy and get better balancing out. So there's tremendous opportunities for Vietnam. Historically, it had set a path of coal in the midterm and nuclear in the future. That was a decade ago. And then more recently, within the last 10 years, it's adapted towards a more renewable energy push. It'll be very interesting to see the outcomes of COP26, which the Vietnamese Prime Minister is attending, on how you balance the needs of an emerging economy like Vietnam and treat it fairly in terms of its economic development. You can't just switch off, obviously, coal and other forms of energy. So it's really looking at that transition. But Vietnam is looking to make sure that its energies and policies include a strict green component. And that's part of the pillar that Prime Minister was talking about earlier today. So there's lots to do. There's a tremendous amount of opportunity. Vietnam's one of the largest markets for renewable energy in Southeast Asia. It's also a market that's looking to adapt to LNG as an alternative to coal. And there's also a market in the future that could be one of the largest offshore wind markets. So there are many opportunities to look at this green and clean energy around that. So it'll probably be given some slack and some support, as will other developing and emerging countries, by the developed nations. So let's see how the negotiations continue in Glasgow this week.
Thank you, Craig. And thank you to the audience for your questions. I can see them coming through thick and fast now. So we've got quite a few in the bank to get through. So moving on to the next question. Are foreign stockholders of Vietnamese stocks allowed to participate and vote on stockholder meetings and have influence on management composition?
I will hand over to Tin on that, who's been doing it for quite some time.
Thank you. That's a good question. In Vietnam, foreign investors can participate in the AGM and have the voting right. And Vietnam Holding, as one foreign investor in Vietnam, that we very active in working with the company on our voting. Before the AGM, very often we have a long discussion with the management of the company on corporate action. For example, the private placement or issuing more share for employee, for example, or the dividend, for example. There are a number of corporate action that was discussed before the issue. And we are very often invited by the management of the company to have a dialogue with them, to express our opinion for them. And of course, during the AGM, we actively participate in the vote to have our opinion on the corporate action. So the answer is yes.
So moving on to the next question, there's a question here about the share buyback program and the tender offer. And Craig, I just wonder if you can just summarize why this took place and the impact of that as well, please.
Thanks, Simon. So Dynam, with a fund manager for Vietnam Holding, the company has an independent board, and that board has a very close focus on the discount to NAV. So historically, the fund is traded at a discount, its share price at a discount to the net asset value per share. The number of tools that the board has used to address that have been a regular share buyback program, where the company steps into the market, buys a share and cancels them. So that's accretive. As a second point, they're also keen to help us market and communicate the fund to people to help drive more liquidity in the underlying shares. And then every year or so, the board, with shareholders' approval, has conducted tenders. And this year it was a tender for 30%. So the tender was done at NAV. We as a manager created liquidity in a very short period of time. And the company bought back 30% of the company's shares and cancelled those. So again, that was accretive to NAV. And that's probably contributed in part to the narrowing of the discount. So the board's very active. They're independent to us. We don't influence them because obviously a decrease in fund size, it takes away management fee, but we look at the bigger picture and we're aligned with our shareholders. And we want that discount to be attractive in the sense of narrow, in addition to the performance that we as the manager looking to deliver. So the board's very engaged and very closely monitoring what happens in the market for the company's shares.
And Craig, in the tender offer, obviously you had to sell some of your holdings, which seemed to be done with the minimal fuss and no delay, which again just points to the depth of liquidity in the local market. Absolutely,
Simon. I think Tan said the daily liquidity in Vietnam's 5 times where it was a couple of years ago. $1.5 billion a day, so second only to Thailand. So we were able to generate liquidity in a very short period of time. We even got some premium for some of our position without any dislocation to the market and without any dislocation to the rest of the portfolio. So that was done very quickly and very smoothly.
Super, thank you. Moving on to the next question. This question is, could you please go into greater depth on the reasons behind the high price to book in Vietnam compared to its neighbours?
I'll hand that one to Tan.
Yes, the high book value of the market can be explained by 2 reasons. The first one is the high weighting of the banking sector in Vietnam. And you may know the very high return on equity of the banking sector. The banking sector in Vietnam usually trading around 1.5 to 2 times of book value. And the second reason is the Vin Group, the biggest private group in Vietnam. And they are doing like automobiles and electric car, and also its subsidiary in Vin Homes, the real estate company, haven't related yet the book value of the land bank. So these are the 2 reasons.
Okay, thank you. Moving on to the next question, which is perhaps related as well. Are not many of the banks underfunded and could have to come to the market to finance their growth? Perhaps we could invite a comment on that, please.
Sam?
Yes, we think that it's an issue for recently. Many private banks have been very successful in attracting more capital from the market, and even the government have been quite conservative in increasing the capital for state-owned commercial bank. But now they turn on the green line for those banks to increase the capital. It means that those banks can retain the earning for the long-term growth. So we think that the issue would be solved by the support by the government and also by the market.
Okay, thank you. And moving on to the next question. Congrats on the very good performance. What's your outlook on small to mid-cap performance versus large caps? Over the last 3 and 5 years, it seems like small mid-caps have higher sharp and lower downside deviation. Do you see that continuing? If so, would small to mid-cap exposure be increased?
That's a really great question. I think it's a good observation too. If you look back perhaps over 3 years ago, the smaller mid-cap companies were trading at a discount to the larger companies, perhaps concerns on size and what have you. But in recent times, that's almost reverted or inverted. So the 30% discount that the small mid-cap companies are on is now, in some instances, a premium to the larger caps. We think partly that's the attractiveness of those companies as high growth proxies for the new investors coming into the market around that. So we like the fact that we're right sized for the market. So we're able to look at the small, medium cap companies as well as the larger cap companies. And we're familiar with a number of the small mid-cap names. But again, to the point is they are growing very rapidly, and it's not long before those small mid-caps become the successful ones, become the large caps. So we're really looking at good sectors first, and then good companies in those sectors with an eye on the size, but really it's about growth. It's around performance and ability to journey with us on our ESG journey. So if that's a large company or a small company, we're equally interested to look at it if it's got those good characteristics.
Thank you, Craig. And moving on to the next question, what is the situation with regard to water availability?
It rains a lot. Vietnam, long country, has a lot of water capture. So actually, historically, 50% of the country's energy was met through hydro sources. Now, obviously, climate change does alter that. And also the energy mix of the country has been decreasing its reliance on those stored hydro, moving to renewable and other sources. It's also a very low-lying coastal country as well on its eastern board, and so is exposed to, again, what might happen on the climate aspect. We look through at water. We've invested historically in some water treatment companies and businesses in that sector. The country also obviously is fed through rivers that connect through other parts of Asia, so there are concerns around damming upstream in other countries and how that flows through perhaps to the Mekong Delta. So these are massive issues, regional issues around river supply and obviously water capture and balancing that. So unlike a country like Pakistan that's got a huge water risk issue and is water short, Vietnam's nowhere near there. But as part of the Sustainable Development Goals, it's clearly on the agenda of everyone to look at better use of water and better management of all of its natural resources. So it's something we keep an eye on.
Thank you. And moving on to the next question, I've still got a number in the question bank, so I am going to let this run. So this next question is, how much growth was witnessed in other countries, for example, China, for the years following after they'd reached the magic $3,000 per capita? Also, what about the stock market performance?
So in terms of that inflection point, I think Tan showed in one of his slides that China more than doubled its per capita GDP within 5 years of that inflection point. And I think Thailand, it took a little bit longer at 7 years. So Vietnam's been a higher growth rate than much of Asia in terms of its per capita GDP journey. And that inflection point is set to continue. So we're looking at continued growth there on per capita GDP. So if you take a view of the domestic economy, a large part of our portfolio is focused on that domestic story, then that's going to translate into higher consumption of consumer goods. We're seeing that's a very changing view. There's modern retailers emerging into the economy. So there are opportunities in omni-channel retailers to address the consumer, digital awareness and branding, and greater choice for the consumer. So it's an exciting sector to be looking at. And obviously post-COVID, and people are going to be out perhaps consuming with a vengeance, as they are in many other parts of the world. So for consumer stocks, there could be good growth opportunities ahead. For us, it's also the business-to-business linkages, the logistics. If you have a growing modern trade and a growing sophisticated retail base, you need good logistics to supply that domestically, as well as bringing the goods internationally as well. So we play that story both through retail as well as distribution and logistics companies.
Thank you, Craig. And we've got two more questions in the question bank, which I'll now read out. So the first one of these last two, is there much IPO activity in the market? And also, does the fund get involved?
There hasn't been a great deal of IPO activity for some time, but as alluded to, the government's looking to increase the equitization of or privatization of some of the state-owned enterprises. But the opportunity for us is not just through the state-owned enterprises, it's through entrepreneurially led businesses that come to market. So we have seen a couple of IPOs this year. And we've also seen a couple of companies that have moved their listing to the main board. And there are some good companies in the offing in the next year and years ahead. For IPO, what's interesting for us is we like to find those businesses that have been backed by maybe a private equity investor that's ironed out the wrinkles of those companies. And we can even come in pre-IPO to a business where it has those good fundamental characteristics, as well as looking and tracking how they perform once they're listed on the market. So there's a number of companies that have been waiting in the wings for a number of years from the state ledger to come to market, and goodness knows when they will come through, but that process is starting again, and the government's put this on its agenda. But we're also equally excited by those entrepreneurially led companies that are looking at domestic opportunities to grow through listing. So it's not the bread and butter of our business. There are 1,600 companies already public to choose from. We're very picky and selective, and there's a universe of maybe 100, 150 that Tin and Tan and the team are looking at on a regular basis. So good IPO, yes, that adds to that stock, but it's not a necessary part of our strategy.
Okay, thank you, Craig. Just conscious that we've just gone through 11:30, so if you drop off because of other commitments, we do understand that, and don't forget this presentation will be available on the website, as I've already mentioned. We do have 3 more questions in the question bank, so I am going to let it run. So like I say, if you need to drop off, then we do understand. But I'll just move on to these final 3 that we've got in the question bank. So the first one is, how is the remuneration of the management decided and who approves it?
I'll address that then, if that's the question around the fund management remuneration. So the fund manager will receive 1.75% of the net asset value of the fund. We don't receive a performance fee, and that's approved by the shareholders and the board. So we don't set our own management fee, it's approved externally. So there's no performance fee, there's 1.75% management fee, and the total expense ratio is about 2.5%.
Okay.
Forgive me for misinterpreting the question. I thought it was about portfolio company remuneration issues.
Obviously, I know that you do an awful lot of work with your portfolio companies, and perhaps it's just worth touching on the IOD as well, because you've obviously mentioned that in other presentations that we've done together.
So I don't want to embarrass Tim, but Tim was one of the co-founders of the Vietnam Institute of Directors, and engages and trains directors who wish to be directors of public companies. So again, without embarrassing Tin, he's an authentic voice and lectures and delivers training around best practice in corporate governance for our portfolio companies, but also for other Vietnamese and foreign nationals that wish to be part of the corporate governance framework in Vietnam.
Thank you. So just moving on to the next questions that we have in the question bank. Thank you for your presentation. Number 1, please detail the additional value in the portfolio from exposure to companies with foreign ownership limits and how and when that may be realized. Specifically, is such realization under consideration today? So I'll let you answer that one first, and then I'll come back to the second part of that.
So look, in the past, the foreign ownership premiums that I think the question refers to, those premiums have been more substantial than they are today. It's about 40% of our portfolio in foreign ownership limited companies. So those premiums now are between 3 and maybe 10%, whereas historically they were between 3 and in some instances 50%. But the stock market has risen so dramatically, particularly through domestic involvement, that the gap has narrowed, as we expected it would do. So how to realize that? It's when the price goes up to its kind of real level where we know there's external demand for it. So that sees those premiums shrink. And we realize it when we sell. So even during the tender, when we sold some positions, there was a premium received. But I say those premiums generally are reducing. Tim, did you want to add anything to the foreign premium aspect?
I have the same view. One is that the market rally making the price of the company also increase. So that narrowing down the premium. The second one is that the foreign investor now can participate in those companies by buying ETF in Vietnam also. So making the premium also narrower. So I believe that some companies still have very good premium now. For example, Mobile One, the premium could be between 7 to 10%. FPT can be between 2 to 7% from time to time. But I think that will be narrower in the future. That's my view.
Okay, thank you to both of you. Moving on to 2 last questions that we have in the question bank that are on a similar theme. Please describe how Vietnam and our portfolio are benefiting from Chinese demand either in terms of production demand or otherwise? And then in a second part to that question, and then what is the political situation between Vietnam and China?
Perhaps answering them in reverse. So China and Vietnam are unique among many countries in the world in that they have two lines of communication. One is from country to country, and then the other one is from Communist Party to Communist Party. So they have a kind of red line that they can, telephone line that they can talk to each other. And so they manage and work across, you know, complex geographic issues and balance those out with trade, and both achieving what they want to do for their populations, raising people levels of income and raising people's beyond the poverty level over many years, which China has done and Vietnam has done. So there's a kind of mutual respect in that regard, and they're able to have multi-point discussions and not necessarily just focus purely on perhaps some of the more geopolitical issues that you can imagine in the larger developed countries that are battling against China's potential hegemony. Vietnam so casts its own. It's not beholden to any of those two countries, and trades very openly with the West and trades very openly with China. China is a great export market for Vietnam, and Vietnam also imports goods from China, manufactures them for global export. So it's a regional balance. Obviously, there's a greater complex view over the next 20, 30 years of what happens geopolitically with countries that interact with China. But Vietnam is seeking to balance its book squarely by being an open economy, that trade. It wants Vietnam to be a key part of the global supply chain. So it's a very open economy. And it wants to see the livelihood of its economy and its people improve. So it will do what it does best for its people, but is a skillful negotiator as well. So we'll try and extract the best of deals on geopolitical and trade terms that it can do.
Super. Okay. That's been really helpful. I think we've now reached the end of the questions in the question bank. So just conscious that we've just gone over time a little bit. So thank you to the audience for staying with us. And I hope you found that a useful session. Like I say, the presentation will be available after this. So I think at this stage, we'll look to wrap things up, and I will just thank you very much for your attendance. I hope that you got an awful lot out of that today. I certainly did. There's always nuggets and facets of this story that is evolving that I always find fascinating. So on behalf of myself, Simon Courtney at RMS Partners, and I'm sure Craig and the team at Dynam Capital, thanks very much for joining us, everybody. And I bid you good afternoon. Good morning, good afternoon. Thank you.